All right, welcome back to another episode of the Investigating Pathways podcast. Today I'm joined by Avichal Garg, who is a two-time founder, having founded PrepMe and Spool, I believe, both of which had successful exits. Avichal now manages Electric Capital. Avichal, thanks so much for being here.
Thanks for having me, dude.
Absolutely. So real quick, I want to start off with sort of your origin story, and I'm curious, what was sort of your childhood and education like up until the point you went to college, and were there any sort of interesting experiences that you think have shaped you since then?
Oh, interesting question. Yeah, I mean, I was born in India and then moved to the U.S. when I was 5 or so. So I mostly grew up in the U.S., kind of all over the Midwest. And a lot of the places where I grew up, there weren't really very many Indian people until I got to maybe high school, where there was a pocket of people in Cincinnati. And so a lot of my childhood was sort of spent as being the outsider, and we moved around a lot, so sort of constantly making new friends. And so I think probably the biggest thing from childhood was probably these like set of skills that come from having to get your head around how to be the new kid, how to read a room, how to be an outsider and feel comfortable with it. Which turns out is a really useful skill if you want to be an entrepreneur, because you probably are not going to have very many friends and you're going to look like an idiot for a while. And you have to be very comfortable being an outsider and kind of doing your own thing, even if people think you're weird or different. So it turned out to be really good training for being an outsider, I think, which, I think a lot of entrepreneurs feel like they're outsiders.
Gotcha. Yeah, I think that makes a lot of sense. And so I'm curious, moving on from there, sort of what was your high school, like as you grew older, what was your sort of high school and college experience like? You mentioned that you sort of found more, I guess, Indian people in high school. I'm curious, did that affect the way your high school experience was as opposed to, I think, elementary and middle? What was your college experience like? Was there anything significant there, et cetera, et cetera?
In high school, it was mostly just about school. Frankly, I was super into a bunch of extracurriculars, and I was extremely busy. So I used to be really good at math, so not anymore. I did.
Were you one of like the mathlete type people who was like doing all the math competitions and stuff?
Yeah, that's right. Yeah, I used to be pretty good. Same thing with like science competitions and all sorts of academic competitions. And frankly, I was pretty distracted with all the extracurriculars. So it was like a lot more fun. I think it's, in retrospect, I'm a pretty competitive person, and so like the competition of it was really fun. I actually did okay in school. I actually didn't do that great. I was like top 10% of my class, but I wasn't, like valedictorian or anything. And I went to a really great public school. I was very fortunate that a bunch of the people that were in the public school were just smart people. And so I was surrounded by a bunch of really smart peers. And fortunately, we had teachers that really cared a lot, and we had parents in the community that cared a lot. So it was a pretty well run school, and they really took care of everybody, which was excellent. And the reason I mention all of that is I think it was actually a really great tee up going to Stanford, because when I got to Stanford, it wasn't any more competitive than my high school. In fact, the smart people at my high school were just as smart, if not smarter, than the people at Stanford. So it was actually a pretty easy transition for me from that respect.
Yeah.
Where I think a lot of people go to a really great university and they realize that they were, sort of big fish in a small pond situation in high school, and then they go to college and all of a sudden they're, surrounded by people who are just as talented as they are, and it's a little bit of a culture shock. Unfortunately, I didn't have that, and so it actually freed up a lot of space for me to be able to do other things. And so I ended up starting a company. I was able to be a lot more social than I was in high school. I was able to figure out a lot of like who I wanted to be and what I wanted to do, and just sort of explore a little bit more. And so, I'd always been into programming, and I started programming when I was, maybe like 10.
Oh, wow.
And so I was definitely going to major in computer science, and I got to do that. But then I also got to explore a bunch. I got to take writing classes and religious studies classes and a bunch of philosophy classes, and it's just like fun to explore a bunch of stuff. And I had like bandwidth to do that, which was pretty awesome. So I was, in retrospect, I did my undergrad and master's in 4 years. And in retrospect, I probably should have just hung out.
Yeah, like you did both. Oh, wow.
Yeah, so I probably should have just hung out for another year or two, and taken more classes and taken more like philosophy classes and just sort of chilled out. But it was great. I really enjoyed my time at Stanford. It's probably one of my favorite times of my life. It's just it's a really special time where you get to like be intellectually curious and learn, and you're surrounded by all these smart people. But it's kind of the era before you have any real responsibilities. You don't really have kids, you don't have a mortgage, you don't have parents who are older, like all these things where like life eventually catches up with you. Um, so yeah, it was a great time. I'm very grateful that I had the opportunity to go there. It's funny too, because I was like very, I had like fantastic test scores. I had all these like national math and science things that I'd won, or been in, consistently very good at. And so, that looked really strong, but my grades were sort of meh. And so I actually didn't get into most colleges and universities that I applied to. But I'm grateful I got into Stanford. And I think it was a very good culture fit. It's a very entrepreneurial place. And I think somewhere, perhaps in my essays or something, they sort of recognize that little entrepreneurial streak, and sort of bet on me. And I'm grateful that they did.
Gotcha. Yeah, that's super cool. So I know you mentioned that while you were at college, you started building a company, and I know as soon as you graduated, one of the first things you did was sort of continue working and founding PrepMe, right? And so I'm curious, what got you to take the risk of building your own company, right? I'm sure like a large majority of the people you were surrounded with at Stanford probably to some degree went to like, I don't know, some like big firm of the time or like whatever it was, right? And I'm curious why you decided to take the plunge and be an entrepreneur.
Yeah, well, for me, it's I don't know if it's trite or what it is, but it was not really something I thought about. I actually I'd started kind of being entrepreneurial when I was about 10. I got I got a graphing calculator and I learned how to program it. And at the time, I would take I was taking classes at the high school, and so I just would read ahead a chapter in like the algebra textbooks and then program whatever the next week's stuff was, and then sell it to everybody in my classes in like the 2 periods of algebra. And so I was just like making money when I was like 10 years old, and so I would just come home with like wads full of money because I wasn't mobile. I couldn't like drive a car and go somewhere and spend the money, so I just had like all this cash. And I've told this story before in some places, but like literally I just had drawers full of bills. And so then one day my mom found them and was like, "What the hell? Like, are you like selling drugs? Are you like beating up little kids and taking their money? Like, what's going on?" And I was like, "No. Like, let me show you." And I showed her that I'd like learned how to program my calculator. It was like selling apps basically. And so it was not really a surprise that I kind of ended up going down that path. I'd sort of always just been tinkering and building and trying to figure it out. And I think part of it was also just like, because I'd grown up so much of my life, not like being in these places where I kind of didn't really have that many friends because I was always the outsider. And so that was a way for me to be like occupied and kind of do my own thing. And so, it just sort of was always what I was doing. So it wasn't, by the time I was in college and starting a company, or later when I started another company and sold it, or, starting electric instead of joining a VC firm, I think it's just sort of how I'm wired a little bit.
Mm-hmm.
Like I don't love being inside an organization, especially if the organization is sort of like if it feels like the organization has won, that's not really where I thrive. Like as I think I really thrive when it's you're sort of like your back is up against the wall and it's like hard and it's unclear if it's going to work, and like that, those sorts of environments I think are where I really operate at my best, where I'm frankly just like the most comfortable. So I think it's just natural for me to have started things and sort of continue to sort of sit on the outside rather than sitting inside an established large organization with a big brand. It's just like not where I operate well.
Gotcha. Yeah, I think that makes a lot of sense. And so for PrepMe, I'm curious, right? It was an online, I believe, like learning engine is how I think you've described it. And so I'm curious, where did the idea for that come from? Like, was it one of those things where you like personally experienced it? Did you like hear secondhand accounts of like problems that inspired you to create it? Where did that sort of come from?
Yeah, the origin story was, I had done really well on the SATs and the ACTs, and was kind of surprised at and I was getting kind of inbounded by people to like tutor them for these tests, and I was just surprised at how terrible the materials were, because I didn't really prepare for it, and so I was just when I looked at some of these materials, I was like, wow, I could literally write better materials than this. Mm-hmm. And so a friend of mine were having this conversation, and my friend and I said, I think we could literally write better content than this. And so this was like the early 2000s. And so putting that together with sort of, our computer science background, we said, not only could you write way better content, but it would actually be pretty straightforward to make this online and digital, and then you could learn at your own pace, and you could learn what the student knows and what they don't know, and actually customize the content for them and customize their path through the content and so on. And so that was a V1 of PrepMe, and it worked well. It it was actually pretty rudimentary heuristics actually resulted in pretty substantial outcomes. It's just like something as simple as, well, if you just don't keep showing somebody something that they already know, and you figured out that they know it, just don't show it to them and let them skip over it. Really basic heuristics like that, like a handful of heuristics, got you pretty far in terms of actually making it so that people were more engaged and learned more. Instead of everybody reading the same book and sitting in front of a teacher, and everybody has to you zone out if you already know what you're doing, or maybe if you don't understand a section, you kind of want to spend more time on it. Like really basic insights, which today I think like 15 plus years ago, that was like novel thinking. Like how would you do that? How would computers do that? I mean, this is like pre-iPhone, right? So
yeah,
and pre-iPad, right? And so these are like pretty novel concepts at the time. And so we were one of the first, if not the first, like purely online test prep business in the early 2000s. It had a pretty successful business. I mean, we were doing single digit millions in revenue just as like a side business, and learned a bunch. It was a great testing ground too. Like I was at Stanford, right? So I would borrow a friend's car or like rent a car and then like drive somewhere to go negotiate like a partnership deal, because I was like 18 or 19, and then like drive back to the dorm and like do my problem sets, right? So it was actually great practice. So like by the time I got my first job, I was at Google, in a weird way, I kind of already had like 3 years of work experience going in, right? Because I just been doing my own thing for 3 years. So yeah, it was fun. It was a blast.
Gotcha. So you sort of touched on this, but I'm curious if you have any further thoughts on it. And it's sort of, what was your vision for the company when you first started, right? I'm assuming you didn't like sit down and be like, hey, this is our problem statement, this is what our mission statement, like all that sort of all that like very formalized sort of stuff. And so I'm curious, what were you hoping to achieve when you first started? Was it just something built for your friends? Were you hoping to like generalize it and make it sort of one of the more mainstream test sources? And sort of how did that vision change as you started seeing more progress?
Yeah, we were not that disciplined about it. I mean, I think we had a very clear vision, which was that the world was very clearly going to be driven by personalization, and not everybody should be learning the same way, and that actually it's a much better model to sit in front of a computer and move at your own pace than to have a teacher just lecturing at you and you're bored and you're like doing problem sets at the same pace. It's just that's clearly not the right model in our opinion. It was very clear to us even 15 or 20 years ago that it was going to be a very, very different mode of education that won at the end of the day. Yeah. So the vision was very clear. In terms of like the details of it, we were very, very young and very noobish, and so we didn't even there were no OKRs. They were very lightweight on goals. We just sort of were hacking and building and running as hard as we could to try to figure things out and piecing it together. So we made a lot of mistakes along the way. It was pretty raw, and so a lot of it was just sort of like brute force. So it's just like we cared and we wanted to build a cool product, and we listened to our customers, and we did all the customer support, and we did all the PR. So just by having to do everything, we were really close to the metal. Like we were close to the code, we were close to the product, we were close to the customers. So it was a really awesome learning experience, but it wasn't very well thought out. And eventually we wrote like a business plan after we'd already built the product, and we tried to be more buttoned up about it. But even that, there were a lot of assumptions baked in, and there's just so many things we didn't know, that a lot of it was sort of fly by the seat of your pants. A lot of it was just sort of like day over day, what do you need to do and get done? It was so the vision was clear, and then like there's a big strategic gap, there's a big communications gap, there's a good like planning gap, and then it was just like, okay, we know a bunch of stuff that we need to do, so we'll just do it as fast as we can. It's kind of how we operated, which is how a lot of I think first time entrepreneurs tend to operate, is like you kind of know where the world will be in 10 or 20 years, and you just run as fast as you can roughly in that direction. And if you get a little bit lucky, you hit product market fit.
Gotcha. Yeah. So speaking of product market fit, I'm curious, is there like a specific point in time where you're like, this isn't necessarily just a side hustle. Maybe it's like something that we could work on full time after we graduate. Was there sort of that moment for you, or was it just one of those things where you're like, we'll run with it until we can't anymore?
Yeah, it was the moment I think was, we ended up winning actually a business plan competition at the University of Chicago. My co-founder went from undergrad to business school at U Chicago, and we applied for the business plan competition, ended up winning, and then I think we were also I'm trying to remember what it was, if it was like Business Week or something. But anyway, there used to be these like, it's kind of like the Forbes 30 under 30, but back then it like wasn't 1,000 people under 30 and they hadn't like scaled it all out. And so I think Business Week used to do like a 25 under 25 or something. I don't remember what it was. But anyway, we got onto one of those lists and we won, like this business plan competition, and we were on like the cover of Forbes Small Business, and we were all of a sudden we were like, whoa, this thing is, we're doing like several 100,000 in revenue as a side hustle. I can't remember if we crossed 1 million at the time or not, but we were like pretty substantial revenue as a side business, and we're on the cover of these magazines. And meanwhile, like my co-founder's in business school and I had a full-time job. So we're like, okay, maybe this thing is actually working. And what would it be? Cause I was already at Google at the time. And so we were kind of like, wow, if this is working like this and it's sort of a side thing, like, I wonder how big it could be if we actually just focused on it full time. And so kind of, I think winning those business plan competitions and getting press coverage, as much as it shouldn't matter, I think for first time entrepreneurs, it was a lot of external validation that maybe we were onto something. And that gave us a lot more confidence that maybe the thing might work. And I think it'll make it a little bit easier for us to take that leap of faith.
Gotcha. Super cool. Yeah. So, and I sort of want to move towards the end of your time at PrepMe. And so I'm curious, I think it was acquired, right, by a company? PrepMe
Correct.
was? Yeah. And so I'm curious, what got you to sort of, I know because you very quickly got back into entrepreneurship with Spool. What can you walk me through that whole process of the acquisition, your thoughts throughout that, how you were feeling? Obviously, one company, one acquisition, huge success rate already, right? So what was sort of your thoughts around that whole experience?
Yeah, it is interesting. I mean, from the outside, it's like, oh, that's great. It was an acquisition. You chalk up a win and so on. In the moment is obviously quite messy and feels very different. And what actually happened at the end of that business was it wasn't growing as quickly as I had hoped. And we'd raised some money, but then also it was right around the 2008, 2009 crash. So like the 2009 crash happened in the stock market, and like the consequence was, because we were an education product, a bunch of a bunch of the funding dried up because tax revenue was going to dry up, right? So like the consequence of like the stock market crashing and asset prices and real estate prices all crashing was that tax revenue fell off a cliff, which meant that schools had less funding, which meant that they couldn't buy our product as much. So we actually had a huge business problem as a consequence of this. And so then coming out of that, going in 2010, the sort of the conversation my co-founder and I had, and he's still a very close friend of mine, we basically said, look, if it doesn't hit a certain trajectory by a certain date, then we kind of have to say this isn't working. And I think it's an important thing to do as a founder, is to actually put like dates in the sand and lines in the sand and say, these metrics or this sort of growth rate or this kind of revenue or this sort of milestone by this date. Because as an entrepreneur, you have a tendency to want to, think that you're right at the cusp of the thing working. It's like right around the corner, and it's like a month away or 2 months away. And then you just keep doing that over and over and over. And then you kind of pop your head up and it's 2 years later and you burn 2 years of your life, when really 2 years ago, you should have just cut it and gone on to do something else for 2 years. And you would have made a lot more progress just by starting over. And so I kind of realized that, along that journey. And so my co-founder and I had a conversation. We're like, okay, by this date, we need to hit this kind of a revenue threshold, and these kinds of customers need to close. And if they don't, then we're just going to sort of call it and say that this is a good business and it'll grow like, 20 or 30% a year, but it's not going to be like a breakout, $1 billion company kind of situation. And so we put that date down and we sort of drove towards it as hard as we could. And we didn't hit the milestones. We didn't hit that threshold. And so we said, okay, we need to switch gears here. Like, this thing is not going to be a huge exit. We need to sort of figure out how to land this in the right way. And we have created a lot of asset value. And so where can we put it where it'll create a lot of asset value and continue, like the product that we've built will continue to be used and students will find value in it, and teachers and so on. And so that's what teed up the acquisition. And so kind of psychologically, and then the process of like finding an acquirer and getting all that set up. And so it's a ton of work. And I give my co-founder Karan a lot of credit for that. He really drove that, and it was a ton of work. And I think, in that process, because we'd already sort of psychologically committed to selling the company, like 6 or 12 months earlier, and then the process took 6 or 12 months, it was, by the time the process was done, we'd already sort of like psychologically, dealt with it. Whereas I think a lot of times what happens is, and this is what happened with Spool, like you get to the finish line and you sell it, and then you need like 6 to 12 months to internalize that it's a different situation now. You've like sold the company and disconnect from it and think about what you want to do and recharge a little bit. But we'd already sort of had 6 to 12 months to do that. It's not to say that we're like sleeping a lot or not stressed or like physically recharged, but sort of psychologically we had separation from the idea that this thing was not working. which is kind of, I think, is an important milestone for a founder. And so by the time we sold the company, I was kind of ready to start something again. And so just kind of jump back into it with my good friend Curtis. This was just like circa 2010. And then Curtis and I have worked together ever since. He's one of my good friends from college, and we ended up starting Spool together and selling it to Facebook, and then working very closely at Facebook together for many years, and then co-invested on a bunch of things together as angel investors, and obviously started Electric Capital together back in 2018. So yeah, Curtis and I have now worked together for 12 years, I guess.
Gotcha. And so I want to quickly touch on Spool, right? And so similar to sort of what I was talking about before, what was your inspiration for building Spool? Where did the vision come from this time around?
Yeah, it was interesting. One of the big lessons that we learned from Curtis also had a prior startup, and I had my first startup. And one of the biggest lessons we learned is that you really have to pick the right market. And if you don't pick the right market, everything else will sort of not matter. Whereas if you do pick the right market, it's all tailwind. And so, in 2010, the market bet that we took was that we should bet on mobile, and specifically that Android was going to be a thing. And so, as soon as we sort of realized that Android was going to be a thing, and that was the bet to take, then we started thinking about what you could build inside the Android ecosystem that would really make sense, and what were the problems at the time. And at the time, there were a number of problems around multimedia, and so people were trying to get Flash to work on mobile devices, and moving media between phones was really, really painful, and between your desktop and your phone was really painful. And so we built a bunch of tooling and infrastructure to just make it really easy to move media around. But I think the takeaway or the observation is like, whereas my first startup was a really sort of bottoms up experience of like, I have a problem, I think I can solve the problem. The second startup, which was financially far more successful, actually, even though it made far less revenue, was a much more top down market centric approach, which I think is a very common learning pattern for entrepreneurs, is like pick the right market and then sort of poke around in the market to see what's changed in the world. And once you figure out what's changed, then you can think of what product you can slot in there to meet those needs. And so that's kind of how we thought about the second one. And then as a result of doing that and being strategic about it, we were able to tee up acquisition offers from multiple companies. Even though the business wasn't working, the product and the technology were very much needed by a number of large technology companies. And so we had multiple acquisition offers from a bunch of companies who have gone on to, they were already public companies at the time or have already gone on to IPO. And so we were sort of financially in a much stronger position as a result of that, because we sort of picked the right market. And so, yeah, it was actually interesting. Like we didn't start from what user do we want to solve for. We actually started from the market and worked backwards for Spool.
Gotcha. And so I'm curious, were there any along the relatively short life cycle of the company, right? It was 3 years, I believe, right? Mm-hmm. So were there any major obstacles or hurdles that you faced that forced you to make any significant pivots, difficult decisions? And if there were there any sort of major learning lessons from them that you think were valuable?
Oh yeah, tons. I mean, like every startup you could write a book about. It's just, who would care? So tons, hiring was hard. Like, hiring continues to be hard. How do you recruit really, really great people? I think, on the market stuff, I think we did a good job of picking the right market, but, had we pivoted 10 degrees in either direction, maybe we should have ended up competing with Dropbox, or maybe we should have actually been, doing more like a Notion or an Airtable and sort of realize that trend. I think there were mistakes we made around building for both Android and iOS at the same time. I think there were mistakes in how we fundraised. We could have been much more strategic about raising more capital at the right times. And so, yeah, I think there were a lot of mistakes around that. But that's okay. As I think there's one way to think about these things is like, when you look back on them, there are going to be 100 things you got right and 1,000 things you got wrong. But really, there were like two or three things that really mattered. Like there were 2 or 3 critical decisions, and I think one of them was choosing to build an Android, which was totally the right call at the time. I think missing building something around the camera and around GPS was like a huge mistake. Whereas we focused on the media challenges. Whereas if I think we'd been sort of poking around more at like camera and GPS stuff, we might have stumbled into something even bigger. And then I think the decision ultimately, when it wasn't working, to sell to Facebook was clearly the right call. Because when we look back at all the other companies of that era, it's very clear that Facebook was the breakout. And so that was clearly, in retrospect, the right call, and actually a pretty pivotal inflection point in our careers in terms of the opportunities that we got on the other side of that.
Gotcha. And so you mentioned the process of raising capital and how you think you might have made a few mistakes there. And I'm curious, not so much about the mistakes, but including your time at PrepMe, what was the process of raising capital like for you, right? Obviously, when talking about PrepMe, you're a first-time founder, you're like in college slash relatively new out of college. Spool, you've got one acquisition under your belt. What was the process of fundraising like for you in both those instances? And did it change for Spool given you had like an acquisition under your belt? How did that whole thing go down?
Yeah, the first one was really tough. Even though we had a business that was making money, and it's because we were much younger, much less experienced, and that market wasn't as good. E-learning is just a really tough market, and a lot of the professional VCs know that. On the second one is much easier. I mean, we raised $1.5 million or something on Safe Notes, like really fast, and it was much easier in part because Curtis and I were both more experienced and had an exit, but also because everybody could tell that market was the right market to be in. Like mobile was the right place to be,
Mm-hmm.
and playing around in Android was like a very reasonable bet. And so it's kind of like, you guys are really smart, you've done this before, you're roughly in the right market, you'll figure it out. And those are really easy investments as a VC, and so it was much easier for us to raise. And I think it speaks a little bit to how acquisitions happen and how you get money out of a business. And so ultimately, like, that was a much more acquirable business than an e-learning business, because there's strategic acquisitions that happen in technology where you have skill sets or expertise or teams or technology, and tech companies will pay for those things even if you don't have revenue. And so that also changes the investor's willingness to invest. And so we recognize all those things from our first businesses, and so we sort of, like, when we were thinking about the business to start and the company to start, we were much more strategic about that, and we took all of those things into consideration as we thought about what ideas to pursue.
Gotcha. And so now I want to jump forward a little bit and talk about Facebook, right? And so I know you worked there for a while, and I'm less interested in like the day to day what you're working at Facebook, but I'm super curious. I know you started angel investing while you were working at Facebook, and I'm curious what got you into angel investing, because I'm assuming that's like probably a pretty significant part of what got you into like the VC space in general, right? So I'm curious, why did you start angel investing? How did you approach that? All that sort of stuff.
Yeah. Well, so what kicked it off for me was basically just my friends started companies, and I wanted to help them and be involved. And so I asked if I could put in a little bit of money. My friends were very gracious in saying yes. And I just kind of got the flywheel going. So some of the early companies that I invested in that were just my friends' companies ended up doing reasonably well, which kind of got the flywheel going. And my motivation primarily was to sort of hang out with my friends, but also I just really like founders. Like, that's who I want to hang out with. It's people that are, doing interesting things and building things and playing around with ideas, and they're not so tied up in things like, brand, or what company do you work at, or how much money do you make. That's not the world that they traffic in. The world that they traffic in is ideas and what does the future look like, and they like building stuff, and that's who I wanted to hang out with. And so it was mostly that. It was mostly I would just be hanging out with these people anyway, and I wanted to help them. And I had, because I worked on Google Search and I worked on Facebook Newsfeed, I had this like tangible set of skills where I could actually help these people, and so they wanted me involved. And if I was going to spend time there anyway, I might as well sort of invest a little bit and see if I could generate some returns too. And it turns out I'm actually pretty good at it. And so as a result, it sort of, the flywheel started going because I was involved with a couple of things and I was actually very helpful. And because I was able to be helpful to people, because I had these sort of tangible skills, and having started and sold a company, and having worked on Facebook Newsfeed, and having worked at Google Search, and then, sort of founders know other founders. And so when other friends of friends would start companies, people would reach out and be like, hey, I'm doing this thing. And, so-and-so said you might be able to help me because I'm thinking about using Facebook Newsfeed or ads, or I'm thinking about Google Search, or it's this kind of a business that's kind of similar to the business you were doing before. And then that kind of got the flywheel going. And then just sort of through word of mouth, it sort of spread and compounded. And since then, I've been very fortunate to be involved with a number of companies that are now pre-IPO stage. So I think I'm like a seed investor in probably about, I don't know, maybe 10 to 12 companies that are, have gone from 0 to $1 billion, and maybe 5 or 7 companies that are north of like 5 or 10 billion. So there's a bunch of things.
That is incredible.
Yeah, I've been pretty fortunate. Well, it's a good time to be an investor for the last 10 years, But it's been a good run over the last few years. So very fortunate. It's fun. Like I said, it's just, mostly about hanging out with people who are really smart and playing around with cool ideas and just getting to hang out with them.
Gotcha. And so, I know you ended up being a part-time partner at YC for a little bit. Was that just sort of a logical extension of angel investing, the time you had spent in like startups on your own? And so you were like, it's worth helping out like other startups through an institution like YC, right? I'm curious what got you into YC.
Yeah, so I'd invested in some YC companies. I'd actually sent some people over to YC, like where I'd invested prior to YC, and then they'd gone through YC after. And so I knew some of the partners there, like Sam and Daniel Gross and Tim Brady, and they're like really great folks. Jeff, and Tim and Jeff had done like this education incubator previously, and so I sort of crossed paths with them before. So I sort of knew some of them in passing, either through investments or the founder community. And and this was after leaving Facebook, and so I'd already sold some companies, and I was thinking about starting another company with Curtis, and but I was sort of just exploring ideas, and the YC folks were very generous and said like, hey, if you're just exploring ideas and kind of bumming around, what do you want to just bum around our office? Do you want to just like hang out here and help some founders too, since you've done this twice now? I said, sure, that sounds like fun. And so then literally the old YC office used to be down the street from where I used to live. So it was just literally I could, walk over in like 10 or 15 minutes. And so I was like, oh, that sounds fun. I'll just have like a place to go, and they have coffee, and I'll just hang out there instead of like hanging out at home all day. And I got to hang out with a bunch of founders and spend time with folks like Aaron and Adora and just Mike and Michael, and like just learn from them too. So it was a really good opportunity to just like hang out and learn from them, and make some friends and just kind of help founders, while I sort of thought through what I wanted to do. And it was during that period, because this was I guess starting like right at the end of 2016, early 2017. And I've been spending a lot of my personal time in what we now call Web3, sort of like distributed systems and how do you build software in a distributed way, and like what's Ethereum and these kinds of things. But I was spending a lot of my time in that stuff in 2016 and 2017, and just kind of went down the rabbit hole from there, which is why I then sort of decided to go off and start Electric, as just sort of, instead of starting another company, we ended up starting a VC firm.
Gotcha. And so I want to talk about your process of starting Electric real quick. You mentioned that you were getting into Web3. I'm assuming it wasn't called Web3 then, right? I had no idea what blockchain and stuff was then. So, okay.
Yeah. It was either blockchain or crypto is kind of what people called it. It wasn't really called Web3 yet.
Gotcha. So you were getting into those technologies, and I'm curious what got you to fully commit to venture, right? You theoretically could have gone on working at YC, right? You mentioned that you thought it would be preferable to start a fund as opposed to another company. And so I guess what got you into the fund as opposed to like continuing at YC, working at another firm, and like specifically why crypto and blockchain? Like what attracted you to it, and why did you think it was going to be like successful in the long run?
Yeah, so I guess there's two questions. There's like what drew us to this space, and then how do we sort of decide to do the VC firm, or like how do we know that was the right path for us? So on the space, it was actually a very sort of emotional decision, not a rational one. We were spending a lot of our time in it. We'd read some white papers, and we thought it was a cool, different way to build software. We sort of Curtis has a distributed systems background. I played around with a bunch of peer-to-peer stuff when I was in college and networks, and so we were just sort of intellectually curious with it and playing around with it. And what we started to realize, especially in like early 2017, was we would go into these chat rooms, and there were these really interesting conversations happening, and it was a bunch of sort of people that you didn't know, and they're anons, and the people in those in this groups, you're like, oh, I don't know if this person's like 17 or 47. I just know that they're really smart. And when you looked in the ecosystem, you're like, wow, there's like probably some bad actors here, in terms of like drug dealers, or people trying to evade taxes. And there's some adult, film stars here, but there's also college professors and college kids and, Turing Award winners. And, there's government officials, there's like the CIA, and there's Wall Street people, and there's all these entrepreneurs. And when you look at that community of people, like that community of people doesn't get together that often. Like, if you threw, the example I always use is like, if you threw a dinner party and like drug dealers and adult film stars and the FBI and the CIA and some government officials and Wall Street bankers and a bunch of entrepreneurs and a bunch of college kids and your college professor showed up, you'd be like, wow, this is a weird party. Like, how did this party happen? But that happens every 15 or 20 years. And when it happens, it's because all of these very different people are seeing value from their perspective, but they're all seeing some value. And that's a really, really strong signal that there's something fundamentally happening here. And I think the sort of association with the speculative activity or the scammers who invariably come out when there's speculative activity, or some of these sort of, types of behaviors that people may have moral objections with, like people recoil from that and they sort of look at that and they're like, oh, I shouldn't get involved with those things for all those reasons, the speculation or the scammers or whatever. And I actually think that that's like the opposite of what you should do. That's kind of the like signal that there's real value here somewhere. And then the job ends up being like, how do you cut through the noise to figure out where the real value is? And so we said, okay, this is the space that we want to be in. Like something is really happening here. And it's very, very fun. We're just having a good time with it. So we're just spending all of our time doing this stuff. And we were sort of personally angel investing. And so we were investors in a number of companies and protocols of that era. So like Dapper Labs and DYDX and Bitwise and Anchorage and a bunch of good stuff that's gone on to do well. And we were spending all of our time in it. And then a bunch of people started reaching out to us just asking for advice. They're just like, hey, you guys have been spending a lot of time in this crypto, blockchain stuff. Could you come help us like think about it? Could you help our partnership think about it? These are like VCs or investors. How do you think about Ethereum? Like, what's an ICO? Like, what is Bitcoin? So we're just getting a bunch of inbounds from people that we'd worked with over the years. These are like VC firms or angel investors or people that we worked with. And so we just done a bunch of kind of teach-in and conversation kind of sessions. And then kind of by the end of 2017, a bunch of these people basically realized they're not really set up to participate in these ecosystems. Like they don't have the infrastructure for it. Like they didn't want to register with the SEC if they're VC firms because there's a bunch of technicalities around how a VC firm operates with respect to the SEC. And they had most investors, if you go back to like 2016, 2017, had a pretty good thing going. Like fintech and marketplaces and SaaS, like 5 years ago was still a pretty great thing. And so they were like, I'm just going to stay focused on my core business. And then of course, crypto crashed in 2018. But a few people came to us in early 2018 and said, hey, can we just give you guys money? Can you just do what you're doing with your personal angel investing, but could you take some of our money and do it too? And that to us kind of sniffed like product market fit, right? Like this is sort of the lesson of having been an entrepreneur is like, if people are showing up and basically saying, hey, why don't you take my money and just do whatever you do? I don't really understand what you do, but please take my money because I think you might be onto something. That's like a good sign that you might have some beginnings of product market fit, right? Like people are just offering you money without really understanding what you do. And so we said, you know what, like maybe we should take this money. This is the space we want to be in. We thought we'd start something, and maybe the thing we start is this. And really, it's just a business model question, right? It just so happens that when you take other people's money and then you deploy the money, you have a very particular business model, but actually the thing that you're creating is still a startup. And if we sort of like think through what that is, maybe actually the way you need to build a VC firm in this space is very different. And it's not actually going to look like a traditional VC firm. It's actually going to look more like a tech startup. And it's because the stuff that you have to do here is much more technical. Like the way that you operate has to, you have to look at nodes and smart contracts and do code audits and evaluate what's happening technically. You have to like figure out like when you're making an investment, it may not be that you actually sign some document and do a safe. It's like you might go to a foundation and buy tokens and then have to stake them, right? It's just like the mechanics of how you invest are just so different.
Have you actually like made investments through such mechanisms?
Yeah, we're fully crypto native. We have, most of the team is engineers, so there's about
interesting.
Yeah, so about everybody in the investment team has backgrounds in computer science, undergrad and grad school, and then we have a team of an additional 5 engineers and 2 designers and a data scientist. So like if you look at the like I described to you what we do, right? Or if I like showed you our about page or our team page, and I was like, oh yeah, we have 2 designers and a data scientist and like 10 engineers, and then like a finance person and an ops person. You're like, oh, you're a tech startup, but actually what we are is a VC firm. It just doesn't look like a VC firm, right? Just because all the stuff that we have to do day to day is totally different. And so yeah, that's how we're building Electric. It's like we're building it the way you would build a software company, not the way that you would build a VC firm, because I think the way you need to operate here day to day is just so fundamentally different.
Interesting. Oh, that's super cool. I didn't, for some reason, it just never crossed my mind that even with like all these anonymous companies, like you would have to send money through like some sort of smart contract or something like that. I never considered that.
Yeah.
It's very interesting. So I'm assuming y'all are probably like to some degree the black sheep in crypto, or not in crypto, sorry, in venture. Sort of how has that worked out for you? Right. I'm assuming there's not many other companies that, or many other venture firms that are building their firm like a company like you are at Electric. They're not doing these things where they're like these unconventional, quote unquote, unconventional methods of sending money. How has that worked out for you in the space?
It's been great. I mean, I think it's relative to the traditional VCs, it's been really, really great because we're just doing a bunch of stuff that they can't do. And so it's sort of it's created a space for us which is just so different from what the trad VCs do. And yeah, there are a relatively small number of people that are doing what we're doing. It's like us, Andreessen, Paradigm. It's like a very small group. And so yeah, we are in the venture community. I think we have been sort of the outsiders. It's starting to change. I think as of last year, like 2021, people in venture and I think investing in general sort of got their heads around the thing that that maybe crypto is real and that actually they should be paying attention. And so I think the way I described it is I think 2021 is the year that crypto went from being contrarian to being consensus. And so now a lot of the VC firms are getting up to speed and they're trying to figure out how to actually participate here. And I think it'll be really interesting to see what happens. Like if we go into another crypto bear market here, maybe all of those firms will lose their sense of urgency to focus on this stuff and kind of step back again, which would be great for us actually. Like that means everybody will sort of step away and it'll be really good for us. So, but yeah, I think at this point we were the outsiders and it was not clear whether we were correct. We were contrarian, but it wasn't clear whether we were correct. And I think the conclusion everybody's come to over the last 3 years is we were contrarian but correct. And now everybody's trying to figure out how to get to this side of the line. And so at some point, the things that we're doing have to then move beyond the things that are obviously consensus. Because now if everybody can buy like Bitcoin and Ethereum in their funds, then that's not really the consensus trade anymore. And so you need to figure out like that is the consensus trade. It's not the contrarian bet anymore. And so a lot of what we start thinking about is like, what are the things that we can do that the traditional VCs just can't do?
Gotcha. And so speaking of, you mentioned how 2021 was like more people were getting into it in terms of venture. Obviously 2021 new year, like going into the new year, crypto explodes, right? Bitcoin crosses, I think what the landmark that people were super excited about was 25K, right, on Christmas of 2020. And it just kept skyrocketing for the most part. And I'm curious how, obviously you said more venture companies got into play. Were you seeing, venture funds, were you seeing more sort of crypto-based companies cropping up, more ideas being built? How did that affect your day-to-day investing?
It hasn't really affected it that much. I mean, we kind of are still doing what we were doing. We're still looking for really interesting, crypto networks. We're looking at really excellent technologies. We're looking for really excellent teams that know how to build community. We're looking for communities that are doing something and have, some strong values orientation that sort of, powering what they're doing. So, a lot of what we do hasn't really changed. In certain parts of the market has made it more challenging because there's more competition. And so, I think there are definitely more challenges. It's harder than it was 2 years ago in some sense. But that's sort of what you would expect. It's not a surprise. Like that's exactly what you'd expect with any new and emerging market is like, once people figure out there are really excellent returns to be had, then, does it really make sense to, nobody's going to ignore you, right? If you can make the kinds of returns that VC firms and crypto have been making, then, you can't be ignored for that long. And so, so no real surprises, no real change to our operating plans. We're still doing what we're doing. We just sort of have to run faster and stay ahead of everybody else.
Gotcha. Yeah, that makes sense. So now for the next few questions, I want to sort of take a bit of a step back and I'm curious, just larger level learning lesson, important stuff type of things, right? And so first thing up is, what is like that one thing you wish you had known, right? When you were starting out any of your companies, Electric, any of these, is there like one sort of important thing you would have told yourself if you could go back like 10, 15, whatever, many years?
Many things. Probably the biggest one is you have to pick the right market, and everything else will take care of itself. And then, I think that's probably the biggest mistake I've made, is just picking the wrong markets. And everything else is sort of, a rounding error. And I think, kind of in the same vein, I think there are a relatively small number of decisions that really matter every year. And so if you think something that you're deciding is one of those, then you should really, really pay attention. And if it's not going to be one of those, then you should like decide quickly and move on. So in some sense, like, most people spend too little time thinking about the things that really matter and too much time on things that don't really matter. And if you can kind of get that balance right, you'll actually make better decisions and be able to make more decisions, because actually most decisions don't really matter that much. And so I think if you kind of get those two things right, like, you can actually get pretty far. Like, pick the right markets and be like thoughtful about the things that really, really matter, and don't worry about the things that don't matter, in terms of like the quality of decision making. And you just sort of, if you're patient, that will compound over time. And at least that's how we've approached Electric, and I think it's really worked well for us.
Gotcha. So next thing up is, at this stage, would you call yourself successful?
No, I mean, the reason I hesitate is, like, I think by like external measures, we've been extremely successful. But that's sort of like not really the thing that I think about. I sort of have the internal barometer of, are we operating as a team at our fullest potential? Are we operating at the level of what we're capable of? And the answer to that right now is no. So despite us being, as successful as we have been by sort of a bunch of external metrics, I don't think we've yet actually executed to our fullest potential as a team. And so that's what I'm excited about for this year, is I think we're starting to finally get into a good cadence and starting to think about what that means and how to be able to do that. And I think once we're able to do that, I will think about us as actually being successful, because we'll have built a thing that actually operates well and runs well and can run independently, ultimately, of me. But we're not there yet. And it's funny, because that might not 100% correlate with financial returns or financial outcomes or anything like that, though I think it will. And so, our returns have been really, really excellent, and we've been fortunate to be involved with a number of great companies and protocols over the years. But relative to what I think we're capable of, I don't think we're anywhere close.
Gotcha. Okay. Yeah, I think that's fair. I agree with the thing about like externally. I agree. Like, that is the first thing that I feel like comes to mind when looking at venture firms that I have seen. The general trend when I talk to y'all is like, there's always more, which is super cool, super fascinating to me. And so I want to end it with a question I ask all my guests, which I hope reveals a little bit more of like personality-wise things, which is just, what is your favorite number and what's the significance behind it?
It's a good question. I don't know if I have a favorite number per se. I mean, maybe it's just the number one, right? Sort of in keeping with the theme that we had, is like, being an outsider is pretty lonely. And so, you get used to it, and it's sort of one is embodiment of that, and then there's also sort of like the aspirational, if you're actually really, really good at what you do, and you are actually realizing your full potential, then there's a good shot that you might actually be the best at what you do. And so, sort of symbolic of that as well, I guess.
Gotcha. I have to say, like, the being the best that you do makes so much sense to me, and I also think it like throws it back to like when you were saying, when you were mentioning like you're a competitive person, I like fully relate to that. But yeah, I think that brings us to a really nice close. So yeah, thanks so much again for taking the time to talk to me today.
Absolutely, my pleasure, man. Thank you for having me.
Yep.